Chris from Serene Education with the 4 majors analysis update for the 14th of June 2012. Just going to be looking at the 4 majors, starting with Euro against US dollar. Okay, on the daily. So what's been happening? The past couple of days, we've seen further upside movement after this bullish engulfing here. A lot of hesitation going into this consolidative range, or this pullback that we've seen after this massive downside move. In doing so, we've seen price trading below a major support and resistance level here, primarily at 1265.00, a noticeable price support becoming a new resistance lately. If I just zoom out, you can see quite clearly through December and January of this year we've seen this area being tested before, and sure enough we saw price hesitating at this level before we saw a breakthrough, then a pullback, and then a continuation to the lower side. In doing so, we've seen recently a nice indecision followed by a bullish engulfing, a nice morning star pattern, and then price bouncing higher and retesting the underside of 1265. In doing so, failing to break. So hesitation at the underside now of a prior long-term support. So as long as it maintains, as long as price maintains this outlook of resistance or consolidation at the underside of 1265, the more likelihood is we're going to see price reverting to the downside quite soon. It's imperative that if this is to be a genuine pullback long term, then we need to see 1265 being breached quite soon, and in doing so finding support above this area before we see further extensions to the upside. And if that was the case, then we should be targeting ultimately back up towards the 1300 mark, that all important break area that we saw just recently before we saw this massive downside move to the market. So as long as it maintains this consolidative range at the underside of 1265, the more likelihood is we're going to see price reverting to the downside. Okay, don't look for any buying sentiment into this. It's quite close. You'll be risking quite a lot. I'd rather wait for confirmation, break higher, or a bearish engulfing to confirm this is still definitely a major resistance level after previously being a support. And in doing so, we should see if ultimately what is called a move with a breakout, the pullback, and then the continuation in the downside trend in the direction of the breakout. Next up is sterling. Let's have a look and see what's been happening with this pair. Well, we know on a weekly that at 15,300 happens to be a major support and resistance level, and you can see price since 2010 and early January of 2011, and then October, November of 2011, followed by January of 2012, followed by May of 2012. Support had, or a test of the support at 15,300, sorry, has been tested, and we've seen a bounce. Now, how a very, very, very strong support and resistance level on our weekly, so that will reflect on our daily time frame. So selling into this area here through May, a massive downside move for sterling against US dollar, and in doing so we've seen price pretty much bouncing to the upside. And in doing so, we take the all-time high here, for example, in May, before we saw the sell-off down here to 15,300. Notice that the 23.6 area has become now some sort of area where we've seen price consolidating at, not trading any higher, not trading any lower. And you can see price support and resistance here, roughly around the 15,600. Price has failed to actually trade higher than. Ideally, if it stayed above the 23.6, then ultimately we should be seeing price reverting to the upside, with potential of 38.2 being our next target. Failure to find support at 23.6 would ultimately see price reverting to the downside, with that 15,300 back on as a potential target long term, as we are seeing negativity in the market and price is trading lower. We have a higher highs, but as long as it's negative, the CTC very much in our favor. Red, 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 all the moving averages above price. Notice the past couple of days, the 20-period moving average acting as a nice ceiling level. We had a nice bullish up candle engulfing all of this indecisive, these two indecisive days. One up, one down, doesn't make any sense for this bull. However, price yesterday failed to take that and to trade higher into the 38.2. In doing so, trading below the actual 23.6. And in this morning, looks like it's going to fail yet again at this level. So as it stands at the moment now, the longer it trades under 23.6, the ultimate sentiment for this pair is still very much negative, with the outlook of 15,300 back on as our first potential target for the foreseeable future. So as it stands now, the longer it trades below this 23.6 here at roughly the what is that? The 51. What's that? Let me just get my bearings right here, guys. That's 1551.10. So as long as it trades below that level, then we should be looking for potential for further downside movement. But you can see quite clearly a consolidative range on sterling, not really giving anything away, guys. And this is why it's so important to get a genuine break lower high here. Otherwise, you end up just being traded. You end up just being faked into this consolidated range, which is not making you any money, and you're just wasting a lot of time just trying to make anything of it. So it's rather just to cap it on either side and say, listen, if you genuinely move higher with a lot of sentiment and you genuinely move low with a lot of, then I'm interested. Otherwise, not interested at all. Next up, US dollar Swiss franc pair over here, for example, we've seen price rallying as its counterparts have also been doing the downside. We've seen price reverting to the upside and doing so, breaking price support and resistance levels that we saw back here in early January, roughly around the 960 mark. Breaking above it, we saw price heading slightly high before we saw an evening star formation. We looked for the breakout, the pullback, and we were expecting the continuation to occur, which failed to actually materialize. In doing so, we saw price reverting back below the 960 mark and now consolidating under this area. So we've seen this little breakout of prior resistance, which we're expecting to be new support. So we had this candle that just actually closed above here. The next candle would have to be in our trigger candle. Okay, so a nice bullish candle up here would have definitely told us that prior resistance was looking good for new support, and then we were targeting the higher highs. I noticed our CTC was very much blue across the board. All our moving edge below price, so everything was looking fantastic for that. However, the market just didn't see any sentiment there that generally actually favored that, and sure enough, it dragged price lower than the 960, and then what it's doing at the moment now is pretty much consolidating. And as I mentioned yesterday, the more it actually trades below 960, the more likelihood we're going to see price falling to the downside. It has to be trading above 960 in order to be targeting these higher highs here, that 980, just short of 980, 975, etc. that we saw just recently. Last couple of days of here, after this bullish up candle, has now formed a lower swing, and you can see that we are swinging lower from a high to a low. So, and you can see that there's more price action below this 960 area recently than above it. Okay, so as long as it remains below 960, ultimately on our intraday time frames, we should be looking for potential sell signals to occur. You can see if I do a fib retracement area from the low to the high recently, you know that 23.6 has been breached, and our target next after yesterday's down candle, it looks favorable. We can see a slight hesitation area, for example. Notice that price has found support through here. It must be very, very important that we actually see this support area over here being broken. So 955, trading below 955 would ultimately see us targeting 38.2 at 950. A break of that would definitely see 50% and the 61.8 being targeted for the remainder of the future. So as long as it trades below 960, the ultimate trend is still looking negative. So look at your intraday time frames to see if 90 put that support and resistance level at 960 in your intraday time frames, and just put a trigger alert on either side. Trigger alert above 960, so you can get like an hourly close above 960 to confirm that we're looking for potential bullish upside. Otherwise, we just remain, we just stay away from it and wait for a trigger signal to close lower, ideally below 38.2, because it's quite close here in terms of profit. By the time you get your trigger signal, you'll be trading into a potential support and resistance level at 950, and then we could see a potential bounce to the upside. So it's either you trade very aggressively with a break below here at 955, and then look at the 950 as your potential target intraday. Last pair of the day is US dollar Japanese yen. Price moving higher after these lows in February all the way up to the 8400, which happened to be price support and resistance. If you're doing that and broke through a major support and resistance level here at the 50% retracement area, which was the 80 mark, nice round number, and previous support and resistance going back a number of months. So rallying after that break into another support and resistance level here at 8400 long term, and failing to actually break that to trade any higher. Subsequently, price has been reverting to the downside, and we thought that price would actually make an attempt to bounce or find support over the prior breakout here at the 80 mark. That failed to materialize, and we saw price reverting or trading lower than that 80, consolidating at in between this. We wanted a definite confirmation signal. That confirmation signal came in this bearish candle here on the daily, I think around the 16th of May, and then you can see that price actually closed at the 61.8. Would have been ideal to look for a break and close lower than the 61.8 to give you an idea that we should be targeting the 78.6 fib level. And when it did come along, it did exactly that. It tested, broke lower, and rallied into, or it sold into 78.6 before we saw a bounce to the upside. In doing so, back above the support area here, above the 61.8. And now it's just consolidating under 80. Very indecisive. As I mentioned, the CTC is very much in our favor. We're still seeing lower swings. And as long as price is trading below the 80, guys, below the 80, then it's still negative. Yes, it's just broken this downside trend here. You can see swing low, swing low, swing low, swing low. Oh, it's broken it. However, it's failed to actually break higher than the 80. It's imperative that this is to be a new trend or upside favor. You can see the institution below price still. So it's still positive long term. However, negative the intermediate trend is still negative. And as long as it maintains below 80, then ultimately we should be looking for potential for shorting opportunities because our CTC is very much still in our favor. The only thing that's not in our favor is the fact that we've actually bounced higher and we're trading above the 61.8 again. Get below the 61.8 and below the institution, get our red arrow, still looking at resistance above below 80, then we should be targeting the 78.6 mark down here at 77.70 as our next target long term. The only thing that's going to actually change this market sentiment is a nice bullish engulfing candle taking us above 80. But until such time as that occurs, we're looking for negative sentiment to favor this chart long term. That's it, guys. I hope you have a fantastic trading day. Please ensure that you are aware of any news announcement. There's a lot of news out today for both Europe and the US session CPI results. We also have the Swiss franc. We have the chief press conference, monetary policy assessment, the financial stability report for the Swiss franc out this morning between 9:30 GMT and 9 AM GMT. Then we go into CPI year on year, ECB monthly bulletin, and the core CPI year on year figures for Europe. And then this afternoon at 1:30 PM GMT onwards, we have the core CPI month on month. So we have a lot of CPI figures month on month, year on year, unemployment claims. And then later this evening at 7 PM GMT, we have Mr. Governor King, Merv King, Bank of England, will be chatting. So we could see a bit of some speculative trading later this evening. Could be interesting to see what he has to say. But please make sure you understand or aware of these news announcements and see where price is trading relative to that. So it could give us that sentiment counter that we're looking for in our trades. So bide your time, be patient. Imperative that you are patient as a trader. I promise you, the more patient you are, the more profitable you will become as time goes on. So back that up with sound money management, and you have a winning formula. Okay, so keep it simple. Trust in your ability. Put in place these criteria that you're looking for, these rules, and treat your trading very, very mechanically. Try and the less emotion shown, the more profitable you'll become, and enjoy it. And I'll see you first thing tomorrow morning. Until then, trade serenely.